everybody taking the time out. A little formality here today. We're going to talk for 20 or 25 minutes on these claim scenarios. We're going to go through them, and I think you'll find them very interesting, and we will address the coverages and that. And then we'll open it up for Q&A. We always have a lot of Q&A on these things, so we'll be here to answer your questions. And once again, Jeff Benson, Jacksonville, Florida. I am the Builders Risk Program Manager for Victor. We have a little program that we've been doing now for a while, and it's growing exponentially. We're very happy with that, and we do appreciate all of you being involved. So without further ado, let's go ahead and get into the presentation. Little administrative work here. As you can see, we're going to be going over claim scenarios today, and these are, as you can see on the screen, purely illustrative in nature, and they're not any real life claim. I will say there's pieces of real life claims in there when we talk about fires and things like that, but these are not real life claims. Our claims are adjusted by our insurer, so and they do a great job. And that is their job. Our job is to underwrite this business, price it, and various other things, market it. So without further ado, let's get into some of these claims. And these are, I picked 7, and these are the 7 perils that are kind of more on a catastrophic nature, or at least things that we see in the builder's risk line of business. Fire during renovation. So we write ground up new construction, and we also do renovation / remodeling. There's a lot of terms people use for this type of construction, rehab, and this or that. But one thing we do, and you got to be very careful of, is there's really 2 exposures when you write a building that's being renovated or remodeled. You have the existing structure, and then the renovations that you're going to do to that structure. So in this case, we had a 50-year-old single-family dwelling that was being renovated. And this is a big piece of our business. We do this every day. The project was 95% complete pending closing. Closing was scheduled for the next month. Friday afternoon, a plumber was finishing up a small welding job on the roof, and unfortunately created a hot spot. And for those of you who don't know where the hot spot is, it could be an ember that falls down in the insulation of the attic. And it sits there, and it doesn't start a fire immediately, it smolders. And this one happened on a Friday and was undetected. And as you can see, by Sunday night, the fire ensued and completely destroyed the project, both the existing structure and the renovation value. So the standard builder's risk policy does not cover existing structure. It's meant to cover course of construction, things that are being built or being added to an existing structure. So what you have to do in the beginning when you write these policies, you have to tell the underwriter, I want to include existing structure and renovations. And then the builder's risk policy is endorsed to cover the existing structure value. So in this case, the one that I'm using now for illustrative purposes, everything was done correctly. So the agent included the value of the existing structure, the value of the renovations were both covered in their entirety. And so when the claim was adjusted, the builder renovator was made whole. And I guess this is a happy story. And this is why we want to do this too. It's interesting being the underwriter on a program, is I want to have the proper coverage. And if there's a claim, a legitimate claim, we want to make the insured whole again. That's our job. So that's sometimes we don't talk about it like that. But so really the thing is, what's the lesson learned on something like this when you're doing renovation projects, is to make sure that the renovation value, complete renovation value, and the existing structure value is completely covered. So you have to make sure the underwriter understands this is the project and this is how I want it covered. Insurance to value is critical. I mean, it's critical in all property insurance, but now you have to get the, what is the existing structure worth? How much money are they putting into it? And you have to have a detailed scope of the project, because the underwriter needs to know that. So probably enough said about that, but just understanding that these things do happen and needs to be classified correctly. Number 2, flood. So flood is one of those things that happens throughout the country. It happens in conjunction with big storms. It happens different times of the year. So the There was a structure, it was a large commercial structure, and it was being built on the bank of a river. Now, flood is, priced and underwritten based on flood zones, FEMA flood zones. Sometimes it can be right on a river, and yet it has a low hazard flood zone, just the way it works out based on the elevation of that particular project, because flood is based on individual elevations. So literally across the street, you can have two different flood zones. I've seen that happen. So in this case, it was a low flood zone. So the bank and even the developer did not really think about flood. But obviously the agent was very astute, said, we're building a big project on a river. Maybe we should add the flood coverage. So they did add the flood coverage. So this was in the spring in the Midwest, and what happens in the Midwest in the spring, it's been a heavy winter, a lot of snow, the snow starts melting. Then we have a big rainstorm. Lo and behold, the river starts to rise. Now here's where things get very interesting. So the river starts to rise, the project is under construction, and the builder, which I'll give this is what they should do in these cases. The builder started moving things to higher ground. They had their equipment out there, they had some building materials that weren't installed yet, and they moved it all to higher ground. So as the river rose, it rose to within a few feet of the building, a little nerve-wracking, and then it receded. So the main thing about what we're talking about here is the claim could have been, much greater if the builder hadn't taken steps to mitigate the risk. So what that means is just moving everything to higher ground that they could move. So after all of this, the claim consisted of landscaping only, which, there was a substantial claim, but could have been much worse. So I think the lesson learned here is, first of all, look around, analyze the exposures of the project. I can, sometimes just literally being on the job site and looking around as an agent, you can analyze the risk that they're going to be exposed to. I've seen that happen time and time again. And then the next thing is, when the claim is starting, what can we do to protect the property? What can we do to reduce the claim? And we're going to handle that on another peril here in a minute. But some of this seems like common sense, but maybe it's good to have it written down and make sure you make that part of your proposal when you sit down with the builder to sell this coverage. So that's flood. Theft of building materials. We have seen an increase in this particular claim around the country for various reasons. Obviously, the cost of building materials are going up. The length of projects are taking longer. So we've seen this particular claim occurring regularly throughout the United States. So what can we do? So in this case, the builder shows up for the job site early one morning, and they had the framing package delivered the night before. So he had his subcontractors lined up. They show up to install the framing package, and guess what? No framing package. In the middle of the night, somebody had cut through a fence. They had taken the lights off, so there was no lights. They did whatever they did to them. They pulled a truck up to the project, loaded it up with all the materials that were not attached, and drove away. So this was something that, just one of those things that happens. Okay, I don't know what, so what could we have done better? Let's think about that for a second. First of all, the result of this is the project was delayed because they had to reorder these materials. And as we know, those are taking longer to come. So that was number one. The owner of the home was upset because they thought they were going to be able to move in and they couldn't. So that was the result. But the risk factors here is job site security. So there are some things that a builder can do that don't cost a lot of money. First of all, a fence of some kind would help, even in this case, they cut through the fence. Second would be lights. Lights help, they reduce crime. Cameras, if you could install a camera, they're relatively inexpensive now. That does deter some crime. So take all of those things. And the other piece of this, from an agent standpoint, we take this for granted, but I have seen forms out there that do not include the theft of building materials unless they're attached to the project, like attached to the building. So you need to make sure of the form that you're selling actually does include theft of building materials, whether attached or meant to be attached. That's critical wording in a form, and just don't assume all the builders' forms are out there are the same. So that's theft of building materials. So let's move on. Our next claim, tropical windstorm. So we all know about that. You know, it starts, I think, May and June is when these things are starting to heat up, and we're going to have tropical windstorms. There's going to be tropical storms and hurricanes, and we know now that some of these things will even impact inland areas. So this is critical. So here's some of the things that have happened in other claims. So the builder decided to call his agent a couple of days before the tropical storm was to make landfall. And he just wanted to make sure that everything was in place. He said, yeah, you have me fully covered for this if this storm comes. And the agent said, yeah, you're fully covered, no problem. So the tropical storm unfortunately made landfall, and it blew the roof off of the dwelling that was under construction. So the builder's like, no problem. I'd called my agent, and he assured me that there was coverage in place. Agent was comfortable there was coverage in place, but here's where it gets a little bit tricky. All of a sudden, there was a named storm wind deductible, which meant if the storm was named when it made landfall, a percentage of the total value was the wind deductible. And in this case, the wind deductible was $20,000. And lo and behold, there was $20,000 of damage done to the roof. So the agent had to deliver the news that yes, it was covered, but you had that named storm deductible, and so there really is no coverage because you didn't go above the deductible. Well, needless to say, the builder was not too happy because the builder was like, you told me I was covered. And so what this does is it creates animosity between the builder and the agent. And you definitely don't want the builder bad-mouthing the agent in any given area, especially in a coastal area. Reputation is everything. So the lesson learned here would be, if I was an agent, make sure you spend some time explaining what a windstorm deductible is. If you have a named storm deductible, explain that. And I would put it in writing to the builder, say, this per our conversation, here's how this happens. If this happens, here's how the claim is going to be adjusted. I cannot stress that enough. Explain the deductibles. Because if you don't, you know what they say. If you upset one person, they're going to tell 12 people. You do a good job, they tell one person. So you definitely don't want to upset a builder in any given coastal area. Tornado. Another fancy word we have today is convective wind. You know, it used to be the old tornado alley, Oklahoma and Kansas, North Texas, up through the middle part of the country. Well, now we're having these tornadoes all over the United States, Kentucky, Tennessee, Alabama, Georgia, even in the Northeast. You know, we had tornado damage in New Jersey last year. So this convective wind thing is becoming a big issue. So we need to talk about that for a little bit. So the situation was dwelling under construction in the subdivision. Strong tornado came down and destroyed the building, destroyed the home. Interesting enough, as we always see in these things, no other structure in the area was damaged, just the one that was being constructed. So you think, oh my goodness, what could I have done with that? Well, number one is we are starting to see the use of wind deductibles in inland areas because of these events. So the same applies to convective wind tornadoes as it does to tropical storms. If you have a wind deductible, make sure you explain that to the builder so they understand that, number one. Number two, there are some things you can do during tornado season to hopefully reduce the claim. One thing that happens is loose building materials and contractors' equipment that's sitting around. If it's during tornado season, let's try to keep that to a minimum because all those things become projectiles and do more damage. So keep the job site as clean as possible. So, the key for this is the result is make sure your insurance to value is accurate because these things can do a lot of damage to individual buildings. And if you take care of your client in these times of like a tornado touches you, you'll be the hero. And I think that's what we're trying to be. Is you want the agent to say, I mitigated the claim, I told you this was a possibility, and we were covered. You want to deliver that news. So once again, explain insurance to value. Why is it important? I think we all know that, to avoid co-insurance problems and to make the insured whole again. So insurance value. Another example of a problem with a renovation, and this one I have seen personally on a number of times throughout the years. So we have a renovation project, and the remodeling contractor is doing an interior gut rehab. He's painting, putting new floors in, maybe installing some new fixtures, updating some stuff. Everything's fine, but he takes down a wall and he notices there's damage behind the wall. Maybe there's wood rot, water damage, whatever it may be. And he looks at it and he said, oh, that's a damage to a load-bearing wall. Probably should call another contractor in that specializes in this. But I think I can do it. Can't be that hard. So the remodeling contractor decides to repair the load-bearing wall that was damaged. So as he's repairing that load-bearing wall, he did not take precautions. And the next thing we know, the building collapses. And now you have a big mess on your hands. So it usually happens when a contractor steps beyond their level of expertise. So in this case, claim paid, everything was fine, we think. But when the carrier finds out that the contractor overstepped their level of expertise, I would say they're not going to be happy. The underwriter's not going to be happy because they didn't have the ability to underwrite the exposure correctly to begin with. If they're going to be doing structural work, that requires a specialized contractor. And as an underwriter, that's a different level of exposure. Might not fit certain programs, might be more of a specialized type coverage. And this is something that you just got to stress to your contractors, that when you tell me what you're going to do to the building, tell me in detail, and let's make a determination in the beginning, is this structural or not? If it's not structural, it's fine. If it's structural, we're going to have to do some more work to get the right policy for you. And another thing, and it does happen, if midterm they find this and you contact your underwriter and the carrier that's on the project, they might be able to help you out there, but you need to tell the underwriter as soon as you're aware of it. Communication is always the key in these things. Our last claim, brush fire. I do like this picture, and I don't like it, but it's very illustrative. So we have now brush fire territories throughout the West and even in the Midwest because of the last few years of droughts and stuff. So these things are very important. So we had a situation, there was try to envision a high value dwelling being built in brush fire territory. And it's an out of control brush fire was approaching the project that was under construction. So here's where it gets very interesting to me. So the builder had known he was building in a brush fire territory during brush fire season. And so he had arranged that if this occurred during this construction phase, he had hired an independent fire service to come to the project if the fire was coming towards this project. And sure enough, he called him and said, we need some help. The fire now is coming our way. Now, the other thing they had done is they cleared the area of all brush. They've done their job. They had reduced the fire load all around the project. And then they called this independent fire service in. They showed up and they protected the dwelling that was under construction. So at the end of the day, the agent was a hero. The builder was happy. The owner of the structure was happy. They had looked forward and taken action before the claim was even had happened. So this was a success story, and this is what we want to see. I think once again, it's like just thinking about all the perils that wherever the structure is being built, they're going to be exposed to. If you're in inland California, it's brush fires. If you're in the coast of South Carolina, tropical windstorm. If you're convective wind, it's a lot of places. If it's theft of building materials, it's everywhere. And if it's a renovation situation, that's pretty much everywhere too. So hopefully this has helped you out. We're going to open this up to Q&A here in a minute. My last slide here is just, as always, talking about our pass-through risk for our portal. We're trying to say, if you only have a few pieces of information, this is all you really need, you could pass through our portal and get a quote and issue a policy. And in inland areas, if you can answer these questions yes, it can go up to $3 million on a value and pass through the portal. And in coastal areas, it's $1.5 million in ITV. So always remember us for the pass through. And that's kind of it for today. Darcy, do you want to touch on the pass through real quick?
Yes, Jeff. So we have created a handout to give to everyone on this webinar. You can find it under the Handouts tab, and it just lists everything that we have showing on the screen right now that you can download and use for your next builder's risk quote.
Fantastic. So time for the questions. Hopefully we have a few.
All right, Jeff, we do have a few in the queue. So first question, for an existing structure, do you recommend it to be covered for actual cash value or replacement cost?
Great question. So we have a renovation, so you need to insure the existing structure. First of all, in our program, for example, it is always actual cash value. We will not do replacement cost on the existing structure. However, we have an option called stated value. So we can pretty much get to where we got to get on the value of the existing structure. You need to sit down with the underwriter and say, we think the value of this existing structure is X. We will attach the stated value endorsement. And so you're guaranteed that value of the structure. That's number one. And number two, keep in mind the renovation piece of this is at replacement cost because that's the actual renovations that are put into it. So that's how we choose to handle it. We do write older buildings. They're going to ask questions like if a building's on the historical registry, we might not insure that. But otherwise, stated value is probably the thing to remember, at least as far as the Victor program is concerned. Good question.
All right. And there was a question about the pass-through risk that we just want to clarify. Will you write higher limits on coastal if it doesn't go through the pass-through?
Absolutely. So, I mean, we talk about the pass-through just because that's an easy one. You don't have to deal with an underwriter. You can get a price quickly, a proposal, quote proposal. You can issue the policy. We're off and running. But if it goes over those values, it's going to create an underwriting hold or a flag underwriting hold, and we'll look at it. Doesn't mean we're not going to do it. We're just going to look at it. For our program, our maximum frame limit is $5 million, and our maximum limit on masonry non-combustible and fire resistive is $10 million. So we can readily go up to those values, and we will take a look at those risks on an individual basis. We just talk about the pass-through because there's a lot of that business out there, and we want to write it for you. I think you'll see that our portal is very efficient. We don't ask too many underwriting questions. Our pricing is competitive. And as always, we stand by our base coverage form as the best in the marketplace. So that's kind of my spiel. Good question.
All right. So in your collapse example, would anything have been different if the renovation contractor had hired a qualified structural subcontractor?
Well, I mean, if he had hired a qualified contractor to come in and do the load bearing, and you had contacted the underwriter that was on that risk as it was, yeah, it would have been better. That's the way it should be. And this does happen in real life. I have friends that are contractors, and they run across stuff when they're working on older buildings that they had no idea was going to happen. So I would strongly recommend that. Always stop, tell the contractor if it's beyond your level, you've never done it before, then don't do it on this one. So the difference would have been you would have maintained a great relationship with your underwriter and your carrier. So going forward, it would be better for you, the agent, and for the insured. That's ideal. Good question.
All right. So what is your frame limit, and is it different in higher brush areas?
So I said earlier, it's $5 million is our frame limit, and we do have guidelines in brush fire areas. We will map most things being built in the brush fire areas, and we get a risk meter score, so it tells us the threat of brush fire in that area, and we do underwrite accordingly. But that is individual risk underwriting, so it's not like I could say this fits, this doesn't fit. We're going to have to look at that on a case-by-case basis. I will tell you the concern that I have as an underwriter in brush fire areas, and we see a fair amount of this, especially on the West Coast, is they're going to build a high value dwelling on the top of a mountain or top of a hill. So it's ISO protection class 9 or 10, and they're going to build this really nice home up there. But there's no water supply. So how are we going to get enough water to put the fire out on a quick basis? So might not want to write that risk. I will say this, we're starting to see more of the example that I gave you of the builder, developer, or the owner of the structure hiring or having them on call, an independent fire service. Sounds expensive, but if it saves the building, it might be worth it. And you might even want to check with your underwriter to see if some of those costs could be offset. I can't answer that, but it's worth looking into. So I guess what I'm saying is there are guidelines for brush fire areas. Contact the underwriter, and we'll work with you on individual risk basis. Good question.
All right. Now, in regards to the independent fire service protecting the house during the brush fire claim, does the Victor policy provide coverage to pay for that cost
of
the independent fire services?
I would say we need to look into that before I would say, yeah, it's definitely covered or it's not covered. So that's probably something we need to look into. So I'll take the fifth on that one and write down that person. I'll get back to them once I research it. Like I said, I think it's a great thing to do. I don't know if the company pays for it or not. I'd have to look into that. Good question. I mean, there is something in the form about protecting property. So it might, but we have to look into it.
All right. So will you consider structural remodels? And if so, can you offer coverage on the existing structure?
Okay, we do not insure structural remodeling. And we make it pretty clear on the website when you talk to us that if they're working on load-bearing aspects of a building, it does not fit our program. It's just too much exposure for us. Sometimes people think it's load-bearing, it's not, so it's worth a conversation. But if they're adding vertical square feet, they're underpinning a building, they're doing extensive underground work around a building, those kind of things are structural. If they're changing the roof line, that's structural. Now, if they're putting a new roof on and they're not changing the roof line, that's fine. That happens every day. What I mean changing the roof line would be they're moving the trusses, the load-bearing aspects of the building. That would be too much for our program. The structural remodeling is a whole nother level of exposure that we don't insure. Good question.
All right. So one of our attendees says that he had a client give a deposit to her window contractor and the contractor lost it gambling. Are there any coverages or add-ons that could protect from lost deposits?
Now that's a good one. So no, I don't know of any coverage that would cover something like that. And keep in mind too, as I go back to the disclaimer in the beginning of this thing, these are for illustrative purposes. So I don't really want to get into, a claim that might have actually happened, whether that was covered or not. That's not what I do. I don't adjust individual claims. I just talk about in general the coverage form and how it would respond to other claims. But that's a good one. I've never heard of that being, they lost it gambling. Doesn't seem like that would be covered, but that would just be my initial reaction. Hey, good story. Good question.
All right. How does your deductible work if you have a separate named storms wind deductible?
Okay, our form has a percentage wind deductible, and it's based on the completed value of that structure. So 1%, 2%, up to 5% of whatever the completed value of that structure is would be covered. I mean, that would be the deductible. So you can calculate that based on the completed value of the building, to basically what the policy limit is. And it applies once the storm is named. And I think ours says it's named by the National Weather Service. CNN names everything now, so that doesn't really count. So.
All right, let's do one more question. How does an installation floater on the plumber affect the first claim?
All right, well, so yeah, that's actually, you could look at this as a couple of questions, and I'll try to cover it quickly. So first of all, the plumber burns down a building, so the first people think of is, what about the GL coverage for the plumber? I mean, theoretically, it would pay for that. If it was his fault, he burned the building down, it'd be a GL claim, property damage would be covered. That's one. Builder's risk is always first party, though, and sometimes builder's just steps in and pays the claim and reserves the right to subrogate against the plumber if they have to. Same thing if the builder had an installation floater. You know, would that pay first, or would the builder just pay first and then they'd subrogate against the installation floater coverage? You could see some of that. So there's really not an easy answer. But usually builder's risk is the one that controls this. Builder's risk pays quickly. And so that's why we have builder's risk coverage. But installation is very similar to builder's risk, but good question.
All right, and we have run out of time for questions. So if we did not get to your question, Jeff or someone on his team will be reaching out to you. Additionally, Jeff's got some contact information he can share with you.
There it is. Yeah, just in closing, I'd like to thank everybody for taking time out of their busy day. I think these were legitimate. I mean, these are things that we need to think about as agents. As an underwriter, I'm here to help you, and Donna's here to help you. So at any time, call the other number. We have people here that can answer your questions, and we look forward to writing some business in the coming months. And whatever is being constructed in your area, think about us, give us a call, and maybe we can do something for you. So once again, have a great day and stay in touch. Thanks, Darcy.